Hello, love bugs, and thanks for stopping by the channel. This is Danielle, the Tax Craft Lady. I hope everyone is doing well, and I hope everyone is staying warm and dry. Because here in sunny Florida, it's cold. It's our version of cold. So I'm not believing anything that Groundhog said the other day about 6 more weeks of winter. Stop that. We're in Florida. That's why we're here. Anyway, I had to come in here today and tell you guys about the IRS trap, about the IRS red flags, and what just took place with the IRS. This is amazing because you don't want any delays with getting that refund. You don't need anything holding up your coins. But the IRS just went through a master reset, and baby, the things that are taking over here are going to shock you. All right, before I get started, let's have our no limit minute. Our no limit minute. Our no limit minute today is, if you have big dreams, you have to have big consistency. If you have big dreams, you have to have big consistency. You cannot think that you're going to achieve those big dreams if you pull the blankets back over your head 3 days during the week. You have to be consistent. You have to implement some routines and some systems that you can commit to every single day. I'm not telling you to do a 360 of your life, but I am. If you've always gotten out of bed whenever you feel like it, whether it's 6 a.m. one day, 9 a.m. the next day, oh, you're sleeping until 12 on the next day, you're not going to fulfill that big dream. You can't keep procrastinating. You have to change things, okay? If you keep doing the same thing the same way, you're going to get the same results. So let's change it up. Just start with the next 7 days. Pick one thing that you're going to implement in your life every day to make you more consistent. Let's use that motto: the same thing, the same time, the same way, and the results are going to surprise you. So, if it's get up the same time every morning and drink a glass of water, then do that for the next 7 days. If that's one thing that is going to be something that needs to be a commitment to you, for you, do that for the next 7 days. Then after that 7 days, add something to the routine. That following week, add something else. So now you're saying, I'm getting up at 5 a.m. I'm drinking a glass of water. Then meditating or reflecting for 15 minutes while I stretch. These small things can make a huge difference. You have to realize that your big goal will not go anywhere if you don't change. If you don't take action, what you've been doing isn't working. And I'm not just telling you this for you. I say many of the no limit minutes for me also. I need to enact these things in my life also. So let's help inspire and elevate each other. That's our no limit minute, y'all. Now the IRS, first of all, last night the IRS went through a master reset because people had already been looking at where's my refund and things like that because they were early filers. But with the $80 billion that the IRS just got, yes, 80 billion. They didn't get 80 billion to divvy amongst the employees, nothing like that. They got 80 billion to go into technology, to up their game on artificial intelligence, y'all, AI, data analytics, and automated enforcement systems. And that means the reviews, the audits of your tax return are going to work very differently than they did in the past. Because now the first look at your tax return is AI. And if you think it's only going to affect the wealthier millionaires or billionaires, excuse me, it's not. It's going to affect me and you. It's going to affect us, the little guys. It's going to affect the other 99%. And this is just so shocking. They did a master reset and AI is literally looking at your carbon footprint. So if your things don't match up, AI is saying this isn't right, no matter how right it actually is. I'm going to give you the biggest IRS traps and the red flags to avoid, because if you get anything valuable out of the video, I just want this to be spread, because the IRS, the government, I don't know what they're trying to do to us, but this is shocking. It's really shocking that your personal information is being decided, if it's true, by a computer. What? So if you haven't already, go ahead, hit that like button, comment, share, subscribe, hit that notification bell so you don't miss none of the good stuff Danielle, the Tax Craft Lady, is bringing to the table. So check this out. You see, in the old system, the IRS relied on random things and auditors that address certain things like discrepancies on your return from the prior year, or discrepancies in your side hustle or your business, or any type of crazy discrepancies that were being reported. But the new system that's just implemented system is relying on AI, artificial intelligence, and that AI is looking for patterns. You see, AI doesn't ask, did this person do something illegal? It asks, does this person look different than everybody else in that same scenario, in that same category? And if the answer ends up being yes, oh boy. Now they call that a discriminant function. What the heck? It's basically a grade. So if there's 10 people in the class and 9 of them get a C, but the 10th person, me, gets an A. AI says, hey, something's wrong. And something's not wrong with the 9 people that got the C. Something's wrong with the person that got the A. What? It's crazy. But that's basically how the rejection comes about. Because you're standing out because of that, because you don't fit that mold. What's wrong with you? You're right. You're not like the C's. So AI separates it, and AI says, stop, reject. So let's go into some traps and some red flags that can try to help this work against you. The first discrepancy I'm going to tell you about that the IRS looks at now, because AI is checking your carbon footprint all around. If you think that's not a thing, it is. Because you'll be surprised at how public records can show certain lifestyle uses, whether it be your credit card use, your frequent places that you are at, and different things that you purchase. So the first red flag is the lifestyle discrepancy. And this one now is going to be pretty prevalent in this tax season and moving forward. It's the most common one, and you don't need to have gone out and just bought a Lambo for the red flag to pop up. But let me explain. Just say you make $75,000, and that's what you reported to me as income. But the IRS looks at your lifestyle data. They see that you're paying $2,500, $3,000 a month mortgage. You have a $600 car payment. You're spending $1,500 to $2,000 a month in groceries and eating out. And then all that stuff basically adds up to over $5,500. Now, if you factor in other regular bills like utilities, phone bill, car insurance, etc., you're going to be well over $6,500 a month. And over that, and that's way over that $75,000 that you reported to me, the preparer. The math ain't mathing, y'all. The math there just doesn't work. Now, realistically, you could have had a little side hustle or a little side jobs here and there, whatever, that made up your overflow, made up your other expenses. But the IRS system looks at your cost of living index for your specific zip code, and if your reporting income can even cover the basic utilities and rent, they see that. That's what they go by. Now, this is actually not logical because many people have, hey, this may be the going rent in my area, but my landlord or my mortgage company got me a special rate, this or that. They don't know really what your circumstances in. They're going by statistics. So AI is connecting so many things in your lifestyle to see if they match up to your tax return. They're also connecting your social media accounts just to trap you again and flag your return. Your social media accounts. Social media is part of the whole scheme of things. The IRS is now having AI cross-reference the life you live on Instagram, the life you live on Facebook with your tax return. What I'm saying is that AI is basically pulling any public data that they can find attached to you, like property records, your carbon footprint data, your credit card debt level, all those things connected to your name. So people think, oh, it's okay, it's social media, it's just a picture, it's just entertainment, this or that. No, it will affect you. When they would say, watch what you say on social media because employers are watching, whatever, the government, the IRS, is watching. Keep that in mind. That is the lifestyle discrepancy. On Instagram, you're living like you're a multi-millionaire, but you're claiming you only made $50,000 last year. What? AI saying no, flags, reject. All right, y'all. Red flag number 2. That home office deduction that every entrepreneur wants, the home office deduction. It's a great write-off. But the IRS is getting aggressive. The AI infrastructure that they put in place is doing more than just saying, oh, they have a home office. They use part of it for their office, part of it they live in. They're looking at it for real. They aren't just looking at the number you put on the paper. They're cross-referencing your property tax records and civil data. So if you claim, just say you claim 1,200 square feet of is your home office, but your home is only 1,800 square feet. So the IRS AI is saying, you're lying. Do you just live in your bedroom? You don't utilize any other part of your house for your daily living? You're telling the government that maybe 68% of your house is exclusively for business. Now, I can say there are some professions that this could possibly be, but it's more like a multi-use space. Some people I see going into in-home child cares and they're using more than half of their home for their child care. That's different. And they can show some proof. Now, unless you live in the closet or you just live in your room and work in the rest of your house, you don't use the kitchen, it's a red flag. And AI is going to stop it. What makes it worse, just say you have several LLCs, you have several businesses, and all the businesses are claiming home office deduction. How the heck is that? You can't do that. Make sure your home has enough square footage to make your claim realistic. Of course, I have a home office. My employees and stuff, they work from home. Sometimes we'll come together in this space, but I can't say in this one office, I'm running 5 businesses. That AI is not going to believe that. I can say I run 2 businesses out of the office. It's no problem. And we can prove it. But I can't say I run 5 businesses out of this one space and it's all of my home except my bedroom. AI is not going to believe that. Big red flag. Make sure the square footage of your home can realistically suit your business to claim home office deduction. All right, the next thing. The next huge red flag, a huge red flag, is industries that don't match. See, every profession has an outline, and the IRS isn't just looking at you specifically. They're looking at the data center of millions of people that do exactly what you do or what you claim to do, and they have a standard profile for every profession. If you're a freelance graphic designer, your profession, so your profile of that profession says you're likely to write off software, hardware, different creative items, things like that. If you're a plumber, it has a pot that you're in. It says plumbers use PVC pipe, equipment, whatever it may be for that profession. So make it make sense. You see, the IRS wants to see the documentation. And if you claim I'm this or that, but you don't have any documentation, the IRS could say, oh, red flag, especially if you've never claimed these things before. Make it make sense. All right, the fourth red flag, the car write-off. Oh my goodness, this has been a big thing. For one, the big beautiful bill is if you buy a new car, meaning new year, to not get your interest taxed or anything like that. It's not just, hey, I bought the car from my neighbor, 15 years old, whatever. There are certain stipulations. Not only that, I see all the time, the car write-off, you have one car registered to your name. And you're saying that your vehicle you're going to claim 100% business deduction. So AI is saying one vehicle, one business, one person, they don't drive anywhere else. That's all you use the car for. Do you ever use your car for personal errands? Do you run to the market? Do you pick your kids up from school? Come on, how are you doing these things? You're telling the IRS that your car is 100% used for business. You don't use it for nothing else. I'm just going to say, make it make sense. That's a statistical anomaly. They're going to ask you for a mileage log. So just use the mileage log. You can have a vehicle that you use for personal and for business. It's a multi-use vehicle. Use the mileage log to track what's happening. And I don't mean 6 months later or the end of the year, you finally make this Excel spreadsheet that says, hey, I used the car for this, this, and this. It's likely going to disqualify you. You want to use a mileage log daily that you can just pull out of the system. You have it every day, that mileage log, whether you drive a mile or 100, it's there for business. The realistic use mileage app for your business use. So please use that. It'll avoid any problems. The next huge red flag is the business real or is it a hobby? See, losing money in 1 year of business, that's to be expected. You've all been there. That's just the laws of business. It seems it happens. Just think, a pandemic times, we lost money 2 years in a row into 3 years. Some people didn't recover. But now losing money 3-5 years in a row is different. Now with AI, it's looking at your losses and saying, is this a legitimate business or just a hobby you're using to lower your tax bill? And there's a tax code, and it's called Hobby Loss Rule. Look it up. Excuse me. Now you might ask, why does the IRS even care? I'm trying to build something, and here's why. Here is what I do. But the IRS thinks you're using your side hustle to subsidize your personal lifestyle. And it can't differentiate the two. If it sees your carbon footprint as not mathing, you need to make sure you can show things. Separate bank accounts. You have a business bank account. You have marketing expenses that you can show. These type of things will show this is this business that this person is, and this is what they're promoting. They're registered with the state. The IRS can pull that data and see, is it just a hobby or is it a business? If it's a business, make it a business all the way. Avoid the trap. The next one is the dinner trap. I know we've all probably heard of that. People, they're going to dinner with friends, whatever. Oh, I'm going to write it off as business. Let's talk about those meals. It's a 50% deductible right now. If you really are using it for business meetings, business lunch, whatever it may be. So let's say you're a sole proprietor and you make $60,000 a year. And let's see, you have about $12,000 in meals, and the IRS AI is going to flag it. That's 20% of your income spent on eating out. What? So if they see you're actually spending $50 a week at the local pizza shop every night, that does not sound like a business meeting. That sounds like you getting some food for your family every Friday because you don't feel like cooking. So make sure you're keeping those receipts for actual business meetings, business dinners, whether you're talking with someone to collab with, whether you're making a deal, whatever it may be. I hear and see people on the internet saying write off all these things, but the IRS and AI, they're not always going to fly and will likely catch up with you and end up as tax debt. And you don't want that. The next loophole I'm going to tell you about is that vacation deduction. Come on. You book a trip to Puerto Rico for a week. You have a conference there. That specific conference is 1 day for 3 hours, but you in Puerto Rico for a week. You book your room and all your activities for that week and try to put it all as business travel deduction. Stop. AI knows the trip is more personal than business. Now, I'm sure, and you can write off some of those things, but come on, let's use some common sense. Snorkeling or jet skiing, these things are probably not going to be on your business deduction. So you were having a business meeting out on the jet skis? No, that's not going to fly. And now AI is going to say, this goes in this category. That's business. This is leisure. This is a vacation. Okay? Be careful. These traps, these red flags will hold up your tax refund, your tax return processing. All right, love bugs? I know all that information is going to help you file a seamless tax return because you're not going to get stuck in the trap. All right? If you haven't already, please go ahead and like the video, comment, share, subscribe, and don't forget to hit that notification bell. This is Danielle, the Tax Craft Lady. See you guys on the